retailers warn that political pressure to break up big businesses, including retailers, could be counterproductive to the community and to competition. And do remember, the coalition policy is to break up big supermarkets and insurers if they don't comply with price and competition regulations. Well, this week, Rob Scott, who's the chief executive of Wesfarmers, which owns Bunnings, Kmart and Officeworks, warned that those new powers could have the opposite effect of what the politicians hope. Ed Boyd spoke with him after the company's half-year profit result.
Well, Ed, I think that the explanation that the Reserve Bank Governor gave was a very sensible and reasonable one, and that is that there was a case to reduce the rate slightly, and that will give much-needed relief to many households and businesses struggling with mortgage debt. But I guess we also need to be mindful that the risks of inflation remain. So I think it was the right move, a cautious move, and hopefully we will see inflation moderate, government spending moderate, some of the supply side constraints ease within our economy, and that could pave the way for further interest rate reductions.
Yeah, how tough are some of your customers finding things right now?
Well, look, I'll actually start on the positive, Ed. Look, at the end of the day, high levels of employment, real wage growth and population growth generally is creating a level of demand that isn't too bad. But there are a number of customers, particularly those that have large mortgages, that have been feeling the pinch. And we have seen that in our businesses with customers far more value conscious than normal, putting fewer items in the basket when they go shopping. But also on the positive side, through December, we saw a bit of a tick up in the savings rate, which shows that there's a bit of capacity there, but households are still just a bit nervous about what the future holds.
And if there are a few more interest rate cuts this year, will there be a potentially direct correlation with Wesfarmers and with sales results, sales increasing at some of your businesses, do you think?
Well, in Wesfarmers, our retail businesses like Bunnings, Kmart, Officeworks, I think have demonstrated the strength and the resilience of their businesses during the tough times as we had last year. But if I had a choice, I would much rather more buoyant consumer conditions. So if we were to see a pickup in spending, that would unquestionably benefit our businesses. Also, a particularly weak area of the market has been residential construction and the building sector, where there's been so much activity on the government and infrastructure side. It's really taken a lot of capacity away from home building. So we are looking forward to a pickup in that important sector for us later in the year.
Geopolitical risk is very high this year compared to previous years. US President Donald Trump threatening to place tariffs on lots of different goods. If tariffs, they usually are inflationary. If there are tariffs on goods, is it going to force you to potentially raise prices?
Well, look, you're right, there's a lot of uncertainty geopolitically and what will happen with tariffs. And you're also correct that generally tariffs are inflationary. And generally, tariffs slow down economic growth. So we'll be watching very closely what plays out. Fortunately, we're not aware of any tariffs that will directly affect our business, but more of the issues are going to be secondary impacts. So do we see changes in supply chains? Do we see changes in the growth from the growth within Australia? So look, I think our businesses are well positioned to adapt to that. And if there are cost increases, we will do everything in our power to try and mitigate those costs so that our customers get the best deals available.
In your results, you say domestic cost pressures are likely to persist along with the weak Aussie dollar. What are you doing to mitigate those sorts of risks?
Well, look, what we're doing is we're really focusing on that old saying of control the controllables. There are many things that we can do within our business, many of which leverage the ingenuity of our teams, new technologies, better utilising automation and investments in new infrastructure to drive productivity. So ever since COVID, we have really faced into, I'd say, a productivity revolution across our businesses, which is really driving better outcomes. And it's allowing us to keep our prices down, which is growing our sales. And it's also allowed us to continue to grow profits for the benefit of our shareholders. So look, we will continue to focus on that. But obviously, like everyone, we are impacted by whatever is happening in the broader economy.
The federal election will obviously happen this year. Opposition leader Peter Dutton is leading the polls, and he's proposed divestiture powers on big businesses like Bunnings. Is that the right policy move? Is Bunnings too big? Does it need to be broken up?
Well, look, when I hear suggestions of breaking up big businesses, I think what it does is it really reminds everyone of the importance of big businesses demonstrating the value that they add to the community. And look, I think Bunnings has a phenomenal track record of delivering great value, greater choice. Whenever Bunnings comes to town, customers get better value, suppliers do better, team members get paid more, we invest more, and that's even before you get to the over 8,000 community groups that we've benefited through the sausage sizzle and other things over the years. So, look, I think our focus is continuing to demonstrate that value. That's what our job is as a business. And I would hope then if we keep doing that, there'll be fewer calls or less of a rationale to be talking about potentially breaking up businesses.
There's also a chance the election could be won by a potential Labor-Greens alliance. Are you ready for that and potentially having to deal with more industrial action or employment changes?
Look, without commenting on the political side of it, I'd say that I am concerned that there are certain things with economic policy in our country at the moment that are moving us backwards. I think reducing flexibility in the labour market, the extent of regulation that small and big businesses are having to face into, all of these things are contributing to the declining wealth per capita. It's making us a poorer country. So I really hope whoever gets in power and however the parliament looks, that as a nation we can have a discussion about what can we do to create more value, and then by virtue of creating more value and more prosperity, we then all can benefit from that.
Well, just on that, the ASX this week has scrapped its planned changes to diversity reporting rules. Is that a good thing for big business? Less boardroom paperwork?
Well, Ed, look, at a personal level, I was quite pleased to hear that that was scrapped. I have gone through the proposed guidelines, and from my perspective, it was just going a bit too far. I'm a very big believer, and Wesfarmers is a strong believer in the benefits of diversity, inclusion, and indeed a lot of our commitments to climate change and the environment. But the extent of reporting, disclosure has gone a bit too far. And ultimately, there is a risk that if we keep going down this path, it's adding more cost and complexity to business. And also what it will do is make ASX-listed companies less competitive against private companies. And I think we need to be really mindful of that, because I think the ASX is such an important market for Australia.
Wesfarmers Chief Executive Rob Scott, great to talk to you.
Thanks, Ed.